Most altcoins had a very rough time this week because Ethereum got sold off, many alts went down with it, but Aster is the story of this week. Aster is outperforming everything else, and that's because of the support by Binance. Now, we've been talking about Aster before this rally. Have a look at this video over here. It was published 7 days ago. Another video followed, and here's the third update. Now, in the last 1 to 2 years, we have seen one sector of the crypto space grow much faster than the rest. And that's the perpetual futures. That's the levered bets on the price. So perpetual futures allows to bet on rising prices and on falling prices, and it allows to do so via leverage. Have a look at the trading volume on the perpetual futures in the last few years. There was massive growth. Initially, it was DYDX on Ethereum that started the whole trend. Then came Hyperliquid, so that's the area in green. And now we've got Asterdex, which tries to challenge Hyperliquid and which is supported by Binance. CZ, who's the founder of Binance, is tweeting about nothing else. Everything is about perpetual futures and about Aster. And he's making a bit of fun here. There are 2 new words that he learned this week: disaster and hyperliquidation. And even though this is a joke, there's a bit of truth to this, as in many users of such platforms do get liquidated over the long term because of all of the leverage. And Aster is actually pushing this to another level. The competitor's token, Hyperliquid, can be traded on Aster with 300x. So this is something that no other centralized exchange, or decentralized exchange for that matter, offers. And so now we see an explosion in the amount of capital that's in the Aster protocol. Now, why is this shooting up that much? Is the product that much better? Maybe, maybe not. But I think the main driver of this is the airdrop. Now have a look at the TVL, right? This is close to 2.2 billion. And that is already more than what Hyperliquid has with 2.1 billion. Aster is clearly chipping away market share from Hyperliquid. The reason why the total value locked for Aster is going up that much, and why the trading volume is going up that much. That's, by the way, also larger now than what we have for Hyperliquid. The reason why we see all of that growth is the airdrop. What I think is going on here is arbitrage trading for the airdrop. So we can go long one platform. Let's say we go long in Hyperliquid, you go short in Aster. We have zero price risk because the 2 things cancel each other out. But at the same time, we are generating trading fees. We are generating turnover on the Aster platform. And that turnover gets rewarded with airdrops. The airdrop is massively advertised on the platform with an animated button. And yes, Hyperliquid can be traded with 300x. But by the way, Aster can only be traded with 3x on Hyperliquid. But here is the game. We are currently at stage 2 of the airdrop, which goes until the 5th of October, and 4% of the entire Aster supply will be airdropped to the users. And of course, the points for the airdrop are farmed through trading the perpetual futures. By the way, the first video on Aster on this channel was published when the price was still at 60 cents. Now we are above $2. So if you want to be early next time, feel free to subscribe over here. I publish videos on various cryptocurrencies early on this channel. But yeah, have a look at this chart. This is Aster relative to the Hyperliquid price. So how is Aster outperforming Hype? And while things are somewhat flat in the last 3 days, I've got my strong doubt that it will stay that way, because the valuation of Aster relative to Hyperliquid is still quite low. More on that in a second. The main chain for the Asterdex is the Binance Smart Chain. Yes, Ethereum, Arbitrum and Solana is offered as well, but really the main onboarding happens through BNB. And that helps the BNB token as well. In the last few weeks, it outperformed the general altcoins by roughly 32%. But we are getting a bit closer in BNB to a potential resistance. Again, this is a longer term relative valuation chart, BNB relative to the others market cap. And sometimes when we hit those resistances, we might get a sell-off. So buying into BNB right now is probably not the best idea. It's already comparatively high. But in general, the chain is in good shape. We do see continuous growth in the last 2 years. Now let's have a look at the on-chain metrics. Who actually buys currently Aster? Is this the small retail investor? Is this the whale investor? Who's owning a lot of the supply? We've got 87,000 holders of the Aster token on the Binance Smart Chain or on the BNB chain. Now have a look at this here. This is the number of retail investors on the left, the number of medium-sized investors in the middle, and the number of whales on the right. The way we make this distinction is by looking at minimum holding thresholds. How many tokens are held in a wallet? Because when you count all the wallets, we are at 87,000. But when a wallet has to hold at least 500 Aster tokens, so that's worth $1,000 worth of the token, then there's only 12,000 such wallets. So the vast majority of wallets on the BNB chain have less than $1,000 worth of the token. Now in the middle, that's a different cutoff. That's $10,000 worth of the token. And on the right, it's another 10x, so it's $100,000 worth of the token. We can see how all wallet cohorts continue to accumulate. The retail investor tends to accumulate the most consistently though. Initially, there was a lot of leverage in the Aster token. The funding rate to buy Aster was very, very high. The longs had to pay the shorts in order to get more price exposure via the perpetual futures. That funding rate has normalized, and that's a good thing. The open interest is still in line with the price, as in it continues to rise, increasing the leverage in the asset. But especially since we see this massive usage now, since we see all of this capital flowing into Aster, and since Binance is supporting the chain that much, the valuation still seems rather low. Because that's the difference to prior videos on this channel. We didn't yet see all the growth in the usage of the platform. Right now, Aster is at 3.4 billion in market cap. Hyperliquid is at 12 billion in market cap. So the difference is roughly 4x, while the TVL and the fees that are generated are pretty much the same now. The only question is, will those fees be sustainable even after the airdrop? Currently, the way prices are set is that the market expects trading volumes and total value locked to drop by 75% after the airdrop. But I've got my strong doubts. I've got the impression that Aster relative to Hyperliquid is still extremely cheap. Now some people might think that this is just a fad and that this is all gambling, and at some point this will all come crashing back down, as it did for example with the meme coin trading frenzy on Solana, where first with pump.fun we saw all of this adoption and then subsequently the crash. I've got my doubt that that's what's going to happen with perpetual futures as a whole. Because have a look at the open interest in Ethereum over time. Compare this to the Ethereum price. The open interest has grown much quicker than the price itself did. So more and more market share in terms of capital and in terms of trading volume goes to the perpetual futures. And this has probably several reasons. The first reason is that perpetual futures allow us to bet on rising prices, but also on falling prices. The second reason is that it might be more capital efficient, especially if we want to balance out a portfolio. So the leverage, of course, enables gambling, but it also enables capital efficiency. The third reason is that perpetual futures tend to be very liquid and that the spread tends to be very narrow. So whoever wants to buy and sell cryptocurrencies frequently without losing too much is better off using perpetual futures versus the spot market directly. And so the perp market is here to stay. It's here to continue to grow. And Binance is putting in massive efforts to conquer that market as well. It's a very similar playbook to what we have seen Binance do after more and more trading volume went decentralized. Right? Initially, it was mainly the centralized exchanges that did most of the trading. Then came the decentralized exchanges, and there was more and more trading happening on Uniswap on Ethereum. And so Binance just launched the Binance Smart Chain together with PancakeSwap. Now we see the rise of decentralized perpetual futures, and so that's why Binance is also launching that decentralized perpetual future exchange. I do think that Aster is here to stay. It's likely going to be the next PancakeSwap, and it's likely going to flip Hyperliquid over the long term as well. Now there is somewhat of an argument to be made that altcoin season might be imminent. And so that's based on the others dominance chart. It shows how much of all of crypto in percent is currently in the altcoins that are not in the top 10. And this seems to bottom out at very similar levels, and it might have just bottomed recently. In the past, when we were at similar levels, the altcoins outperformed the rest of crypto by more than 300%. So I understand this argument, but there's a bit of a problem with the argument, because the others dominance measures the market cap, but market cap is a very different thing to prices. There's a dedicated website called Tokenomics AI that does nothing but measure the token inflation of various altcoins. So let's have a look at Aptos, for example, here at number 1. This is the Aptos price relative to the altcoin market cap. Since March of 2023, this went down by 88%. And the reason is an ever-expanding token supply. As there's more and more tokens hitting the market and supply is higher than demand, then of course the price has to go down, at least relatively speaking. This is the Aptos market cap chart over time. It's at very similar levels compared to February of 2023 at roughly 3 billion, so barely a change. But in February of 2023, the Aptos price was at $18. And now it's at $4.39. So this is how much impact token inflation actually has. The others dominance does not look at prices. It only looks at market caps. But we do not get market cap returns. We get price returns. Market caps can be unchanged. Prices won't be unchanged if the supply just keeps on increasing. Now, how much of a problem is this really in the grand scheme of things? Is this just a few select altcoins, or do we see this on a broader scale? The answer is somewhat depressing. We unfortunately do see this on a broader scale. So each week we see roughly 1 billion worth of token unlocks. If we do not see at least 1 billion of additional demand coming into the altcoin market every single week, then the prices have to come down. The others dominance might be unchanged, but the price of individual altcoins definitely do get negatively impacted. Aptos is currently the 42nd largest cryptocurrency. It's just an example. Let's have a look at the top 100 cryptocurrencies. In the last year, Bitcoin went up by almost 100%. We've got 26 out of 100 altcoins that did better than Bitcoin. 73 altcoins did worse than BTC. And so here's what I personally do. I'm simply just betting on bad altcoins to continue to do worse. So we can just flip this chart around. This is the Bitcoin price relative to the Aptos price. At the bottom, we've got the others dominance again. So the others dominance did not change at all in the last 2 years, right? It went flat while Bitcoin's price relative to the Aptos price appreciated by 400%. So this is really where I believe the alpha in crypto is. It's the market inefficiency of highly inflating altcoins. I'm following this strategy already for roughly 4 years. So I'm betting on poorly performing altcoins. I'm betting on them to go down further while I'm betting on rising Bitcoin, Ethereum, and Solana. And because of that, I outperformed just dollar cost averaging into Bitcoin. Dollar cost averaging into Bitcoin is shown here as this light gray line. But I got the performance that's shown in the black line. So there is a way to beat the market without trying to find the few winners. We can simply bet on the market structure, on the constantly increasing token supply of many altcoins. It's maybe not as straightforward as just buying a single token. Some things have to be learned, but that's why I made dedicated videos on the topic. I try to make this as simple as possible, so there's really only 2 videos that have to get watched. The first video is using perpetual futures to bet on relative valuations. The second video is risk management with relative valuation bets. Once you've watched this 1 hour of content, you know exactly what to do to get this kind of performance, to set up positions like this. After you've watched those 2 videos and you've joined the community, I will send you my favorite trade that looks very similar to Bitcoin relative to Aptos. If with that trade you do not make money after 1 month of holding the position, then I will refund the membership fee to you. So those $125 are actually not what you're risking. If you don't make money with this favorite trade, you just get that money back. Just message me and I will refund you, no questions asked. Of course, besides this favorite trade, I will also share every single trade that I execute in real time as well. You can simply just copy trade me. A link to Premium will pop up directly on the screen over here. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe as well. I publish videos on YouTube regularly. See you next time on YouTube or see you in Premium. Cheers.